From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for December 29th, 2016. Today we're going to be taking a look at the USDCHF, the US dollar versus the Swiss franc for today's trade analysis. But before I begin the analysis, it's important for me to remind you that we are in the last day and a half of 2016 4-hour trading. I would suggest using extreme caution. This last day and a half, we could see erratic market behavior that you don't expect, with lower liquidities, less traders in the market because of the holiday season. It is very important to be using appropriate risk strategies and maybe a little bit more aggressive risk strategies than you would typically use in normal trading environments. So just take note of that as you look for new trading opportunities over the next day and a half going into the New Year's holiday. Okay, getting started here on the dollar franc, we are in an uptrend. That's not too hard to see on the right hand side of the chart above the blue trend line. It has been moving up for the past several weeks. But as it continues to move higher, and we looked at this yesterday in the live trade room, I'm going to scroll it over just a little bit. If you look top left hand corner of the chart, you can see we are matching historical resistance highs back in November of 2015. We touched this blue shade area at the top of the chart where the black circle is, and that became the reversal point. Now, I'm not saying at all that this has to be the reversal point for a turn back lower. What I'm saying is we're reaching into a significant resistance. So for us to see this uptrend continue, for the market to continue to pressure higher, it's imperative that it breaks through the 1.0300 level and that blue shaded area. Until it does, we're seeing some congestion right now between what is support at the purple zone and resistance at the blue shaded area. You can see both of those levels, the black circle and the red circle on the left hand side, signifying the purple and the blue shaded area as what was historical resistance, offering us clues to these price levels that the market is making trading decisions at now. Now that we've seen that history back here on the left, scroll back into our current time frame and you can see the pattern of the trend. It was in the rise, congestion in the black box, a breakout and a rise, congestion now in the red box. Remember, this is almost 2 weeks of time now that we've been stuck between the purple and the blue shaded area. And again, we've been cautioning this over the past couple of weeks because of the holiday season, lower liquidities, less traders in the market. So we've been cautioning about the potential that it could just move sideways until we get some motivation for it to break out of this range. One of two things is going to happen here over the next several days or a couple of weeks. We're either going to look for the breakdown of the blue trend line, the purple zone, and it reverses, or it breaks above the blue shaded area and continues the trend. So one of those two things is going to happen. Well, since the trend is still intact, we're still in an uptrend, I'm going to focus on the upside. I'm looking for buys on dips into support, which is the purple zone, or a break above the blue zone. The only reason I'm going to begin changing my mind about that is if we start to see significant bearish action and it pushes underneath that purple zone. The purple zone is 1.0235 to 1.0250. So it would need to break that barrier to go lower, and it has not done that yet. And of course, just like all that on the other side, the blue zone, we spoke about that, it would need to break that barrier if it's going to go higher. So let's focus on the trend, which is up. Of course, we've seen the dollar take a pretty good surge over the past several weeks, going back to election results back in the beginning of November. Pretty good surge for the dollar. If that's going to continue, we buy support purple zone, we buy a break of the blue zone, and we look for the continuation towards the upper 103s towards 104 for the dollar franc. And again, the only reason to change our mind about that is a break of the purple zone, likely looking for a little bit of a push lower. Take it down to the 4-hour time frame. It doesn't really change anything, just gives us a zoomed in view about what's been happening around that purple shaded area. Look at this support into that zone. So it's not too surprising that I would be looking to buy into the 102.50, 102.35 level. I am already in the buy at 102.45 from this purple zone. Risk, of course, is that it breaks underneath it. We just talked about that. The risk is that the market changes its mind and breaks under the purple zone. For now, as long as it's within or above it, I'm looking for it to go back up. So your stop loss is, of course, underneath the purple zone. That way, if it breaks underneath, we can limit the potential impact to our trading account. We're going to target, of course, first off, our target will be the blue shaded area. And then, of course, if it can break there, we'll look for further profits on the trade for the dollar franc.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.